Hi, this is Kevin with StockInvestorMaxims.com, the Internet Stock Investing Learning Center. In this video, we're going to learn how to read the balance sheet. This balance sheet is of Lululemon Athletica for the 1st of May of 2011, which is compared to January 30th of 2011. The first section of the balance sheet is current assets. Current assets are cash and other equivalents, accounts receivable, inventories, and other prepaid expenses. These assets are monies that are used to support everyday ongoing operations. With this money, the company buys raw materials, produces a product, adds that product to inventory, and then sells that product on account to its retailers. Total current assets is the addition of cash equivalents plus accounts receivable plus inventories plus prepaid expenses. The next section of the balance sheet is for regular assets. Found here is property, plant, and equipment, goodwill and other intangible assets, deferred income taxes, and other non-current assets. Investments may also be found in this section. Let's have a short discussion about property, plant, and equipment. This asset class is quite unique in that property, plant, and equipment is carried on the balance sheet at its original cost. This means if a company had purchased equipment or property 20 years ago, it's carried on the balance sheet at the original cost. So the property, plant, or equipment may have increased in value over time, but it's not captured here. This is a unique area that investors want to key into and try to understand that the actual book value of a company may be much more than what it actually seems. Goodwill and intangible assets is another one of these areas, much like property, plant, and equipment. Goodwill is when a company purchases another company, it may have paid for that company in excess of its book value. And that price is carried here. But what may also be true is that that company may have raised in value, and that the amount of goodwill here may end up actually being worth quite a bit more. Intangible assets are copyrights, trademarks, and other intellectual property. Over time, a company's intangible assets may be worth more than what they originally paid for them. If you had bought Coca-Cola in 1950, the name and the trademark Coca-Cola may not have been worth as much as it is today. These kind of assets can be proved to be worthy of extra consideration for the investor, because these do actually hold true value, but they're not recorded here on the balance sheet, which in a way obscures our book value in the end. The total assets for a company is current assets plus property, plant, and equipment plus goodwill plus deferred taxes plus non-current assets. The next section of the balance sheet is current liabilities. Current liabilities are accounts such as accounts payable, accrued expenses or accrued liabilities, short-term debts, which may come in the form of accrued compensation and related expenses, and long-term debt that is due. As in the case of Lululemon, we also have unredeemed gift card liability. Current liabilities are liabilities that a company uses to maintain its short-term operational capabilities. Instead of paying for everything in cash, it may choose to use some form of accounts to pay for raw materials and equipment on a short-term basis in a credit account. This is quite often the case with most companies. Total current liabilities is the addition of accounts payable, accrued liabilities, accrued compensation, plus income taxes payable, plus gift card liability. Non-current liabilities is synonymous with long-term debt. Long-term debt are loans that are for longer than a year. Total liabilities is the addition of current liabilities plus non-current liabilities or long-term debt. The next section of the balance sheet is stockholders' equity. Here we find the number of preferred stocks outstanding, exchangeable stock, and special voting stock. This next slide item is for common stock. For Lululemon Athletica, there are 200 million shares that are authorized, of which 540,000 are issued and outstanding. Additional paid in capital are shares that were retained by the company that have been sold. Retained earnings is the accumulation of income that has been collected over time. Shareholders' equity is the total assets of the company minus its liabilities. It is said to be the book value of the company. When we consider the balance sheet, there are three equations that we often take a look at. Total assets is the total liabilities of a company plus the shareholders' equity. Whereas total liabilities is the total assets minus shareholders' equity. And the shareholders' equity is the total assets minus total liabilities. These equations must always balance with each other. This concludes our lesson on balance sheets. To learn more about balance sheets, visit www.stockinvestormaxims.com. Scroll over to Investing Guide, How to Read Financial Statements, and How to Read the Balance Sheet.